Let's do 25 minutes of business here on Business Incorporated, and here's what we have prepared for you. In Ghana, that country is moving to make more gold expansion, especially by local artisans. And in Kenya, debt financing or refinancing is actually the name of the game now. Zimbabwe has trade surplus. Congratulations, over 4.7 billion shillings. Welcome to the program. I'm Amy John McCall. We start from the oil space, where prices fell as U.S. crude inventories rose by the most in 3 years and showing signs of weakness in the physical oil market that's weighed on prices. While traders are assessing whether U.S.-Iran talks could avert a supply-threatening military conflict. Weakness in the North Sea physical oil market is also weighing on prices, according to analysts. Now, see what all of this has done to the numbers. Prices of Brent is down more than 1%, almost 2%, in fact, 1.74%. And it's dropped from that high of about $72, now at $69.62 a barrel. WTI is also down 1.85% to $64.21 a barrel. The North Sea physical market underpins the Brent futures contract, and oil futures may have risen by about 15% so far in this year, 2026. But there are concerns of military conflicts from the U.S. and Iran that has also offset expectations of oversupply. U.S. envoy Steve Witkoff and Jared Kushner, they are due to meet in an Iranian delegation in Geneva earlier today. We told you how the meeting is already gathering. Also, on the supply side, Saudi Arabia is boosting oil production and exports in a contingency plan should any U.S. on Iran supplies from the Middle East. And Venezuela is positioning itself of around 1 million barrels per day to 1.2 million barrels per day in the near term, with ambitious 2027 target of 4.5 million barrels per day, and the long-term goal turns towards its installed capacity of 2.8 million barrels. The strategy is backed by regulatory reforms and high-level engagements with international partners, particularly from Africa. The push to scale output economies to the organic law that opens private foreign participation beyond the traditional state monopoly of Petros de Venezuela S.A. During a high-level working visit by the African Energy Chamber to Caracas this week, Venezuelan petroleum officials and AEC leaders agreed to develop a 12-month joint work plan covering areas such as upstream cooperation, refining rehabilitation, gas commercialization, finance restructuring, trade flows, and training programs. From oil to metals, gold prices edged up today as uncertainty over U.S. tariff policies boosting metal safe haven appeal, while investors are awaiting further details on the U.S.-Iran talks, and that's starting today. So look at the numbers. Spot gold is up 0.4%, $5,190, 0.1 cents. Spot silver is, however, down more than 4% in the red, $87.26 per ounce. Platinum is 2.4% down. The price is $2,275.70 per ounce. Palladium is also down close to 3%. The price is at $1,815.50. And copper is back to the profit-taking arena. It's 0.28% in the red, $6 there is the price. And so even though metals seems appealing at this time of uncertainty, saying that the U.S. and Iran should begin talks today, well, I guess the movement there is not loud enough to change all the colors. And still talking about metals, the government of Ghana has unveiled bold reforms that's aimed at transforming the country's artisanal and small-scale mining sector. with a target to officially channel about 127 metric tons of artisanal gold into regulated markets each year over the next 3 years. The initiative is part of a broader strategy to boost foreign exchange earnings, curb rampant gold smuggling, and strengthen national reserves. Finance Minister Dr. Kassel Atofossen says that the reforms position the Ghana Gold Board at the center of national effort to formalize the ASM sector and capture more value from the country's gold resources. And we know that some of the good news coming from the economy of Ghana started when they gave more attention to locally produced gold. The government of Kenya has successfully raised $2.25 billion through a dual tranche Eurobond issuance, a strategic move that's designed to finance a planned debt buyback, extend the country's loan maturities, and support overall fiscal management. The transaction, priced in global market with strong investor appetite, comprises $900 million in notes that's due 2034, and then there's a $1.35 billion in bonds that's due 2039. The longer maturities aim to smooth Ghana's external debt repayment schedule and reduce near-term refinancing risk that's associated with all the securities that are supposed to be due in 2028 and 2032. Under the linked liability management exercise, Nairobi has launched a tender offer to buy back up to $150 million of 2028 bonds and up to $350 million of 2032 notes, inclusive of accrued interest. In Zambia, the government has reported a trade surplus of about $4.7 billion in January 2026, and that marks a significant improvement in the country's balance of trade as imports fell more sharply than expected and exports during the opening month of the year. This development comes alongside data showing a moderation in inflation and continued shift in export performance. According to figures released by the Zambia Statistics Agency, total trade volume in January amounted to about $50.5 billion. That's down 6.4% from $53.9 billion in the same period last year. Exports contributed $27.6 billion to that total, while imports accounted for $22.9 billion, resulting in a positive trade balance for the month. We move to North Africa, where Egypt has unlocked about $2.3 billion in financing from the International Monetary Fund, that's the IMF, after the IMF's executive board completed key reviews of the North Africa's country's economic reform program. This was announced by officials. The funds released include roughly $2 billion under the Egypt Extended Fund Facility, that's the EFF, of the IMF, and around $273 million under the IMF's Resilience and Sustainability Facility. That brings total disbursement under these arrangements to about $5.2 billion. The IMF's board approved the 5th and 6th reviews of Egypt's economic reform program, supported by the EFF, along with the first review under the RSF. Completion of these reviews cleared the way for the new tranche of funding that's to be disbursed. With the African Continental Free Trade Area gaining momentum, delegates at the meeting Africa's underway in Johannesburg, South Africa, say the gathering must serve a strategic platform to fast-track intra-African trade, deepen investment flows, and strengthen cross-border partnerships across the continent. Our correspondent, Innocent Semosa, sent in this report.
This year, Meetings Africa marks its 20th anniversary and is expected to further shape and elevate Africa's business event landscape. Tourism South Africa says events like this create direct access to buyers, investors, and policymakers, helping turn Africa Continental Free Trade commitments into bankable deals.
We've got about 400 hosted buyers that are here from all around the world. I'd estimate in total our delegates around about, we haven't obviously closed our books, I estimate close to the 3,000 mark in total. And it's really critical. People are landing bids to be hosted in their various cities, in their various provinces, in their different countries. So this is really, really important in terms of an economic driver. This event alone last year drove about 690 million rand in contribution to our GDP here in South Africa.
Delegates and exhibitors argue that trade agreements must translate into practical business connections.
Yes, for Namibia, we understand that the mine sector is growing fast, and we are here with our service providers within the sector, and the main aim is really to connect to other destinations, to connect to other service providers from various African countries. One of the key aspects is to really ensure that we're able to bring events, to bring conferences to the destinations. This, of course, we understand that helps create employment.
It's an excellent networking opportunity for us. So we get to meet in many cases with our existing partners who come down as buyers, and we also get to meet new and potential opportunities for working with new partners around the world. And it's also an opportunity for us in one place to meet with our suppliers and travel partners within the region as well.
They add that sustained collaboration between governments and the private sector will be critical to ensuring the agreement delivers tangible economic benefits for businesses across the continent.
Fortunate enough, I got an opportunity to go and exhibit in Maputo in 2022. So the response was very good. People, even though their currency is low compared to South African rand, but then I managed to make some sales, and then people love the products.
It means that I would be exporting my products that are not known in Nigeria, and it means that I would be making in bulk, and it means that I'll be expanding my brand.
With 2 decades of convening the continent's business community, and as Africa pushes to unlock the full potential of the Africa Continental Free Trade Area, after stakeholders here say the real test will be turning policy into practice and also conversation into contracts. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
Thank you so much, Innocent. Let's head to the commodities market now. And the fruit of interest, or commodity of interest at this time, is dates. And we know this is widely consumed, especially to break fast. It's been enjoyed because of its sweetness and its rich content in fiber and vitamins. Now, because of the demand at this time, I believe that has driven the price of dates up. A bucket of dates, the price has gone up about almost 29% because of this recent demand that has increased. Let's find out, perhaps there are other drivers to this and other impacts it's having. Emefiele Kachuku is an analyst with Financial Derivatives Company and joins us for this. Hi, you're welcome to the program, Emefiele. So we know that every year we see this change in price about this time when there's higher demand. Are there other drivers of this increase in price of dates?
Thank you, Ini, for having me. Yes, you're right that the price of dates has gone up by 28% to 9,000 naira. And one of the major reasons is the fasting period. We're currently in the Ramadan season, and Muslims use these dates to break their fast. Also, other factors are there that are currently driving the price increase of dates, and these include border restrictions. In Nigeria, 80% of dates that are consumed here are imported from Niger, from Saudi Arabia, and Chad. And as a result of border restrictions, we're seeing that supply has reduced, which is also adding pressure on prices. Another factor is high transportation and logistics costs. We're seeing that the price of PMS has gone up by 100 naira. It's currently 839 naira per liter. We're seeing that the cost of transporting these products from where it's produced to the target market has increased, and it's more expensive, which is adding pressure to prices. Then in terms of logistics, due to inadequate infrastructure such as poor road network, we're seeing that more vehicles break down on the road. As a result of that, we see that producers have to repair these vehicles, which is additional cost, which causes prices of dates to go up. All these factors put together have caused price of dates to go up.
Yeah, so when the price increases, it should be to the advantage of farmers at least. Do we see
Yes.
that happening in the Nigerian scenario?
Yes, so you're right that when prices of dates increase, it's supposed to benefit farmers. However, in Nigeria, we only produce 21,000 metric tons and we consume 100,000 metric tons. In order to meet this difference, that's why Nigeria imports these commodities. And as a result of the reason why Nigeria imports these commodities because of lack of proper training. The farming here is subsistence farming, so we're not doing farm production here is not in large scale. Also, we don't have enough funding that will improve research so that we can have better seedlings that will boost production.
All right, Emefiele Onyelikachuku, thank you so much for that. We do hope that we can look inwards more and boost production. Analyst with Financial Derivatives Company.
Thank you, Amy.
All right, let's head to the market, see what's happening. We start from results just released a couple of hours ago. The first to be looking at will be Seplat Energy. We see their audited financial result for the year ended full year 2025. We see significant growth across production. So that's Seplat Energy audited result for full year. They delivered transformational growth in 2025. The group production went up almost 151, 48%, 131,508 barrels per day. Revenue also followed that as expected, 144%. And you know, they deal with the dollars, the hard currency, they're dollar listed. EBITDA also went up there to $1.28 billion. I'm sure if you're an investor in Seplat, you'd have already felt this. This is the result from last year. Operating profit increased to $672.2 million. Operating cash flow expanded also by 276%. We know that the oil and gas sector was really active last year, and I guess the impact on international impact also has contributed to this. Net debt fell. Good news also, 25% to $673.3 million. And total full year dividend yesterday was last year, beg your pardon, was 25 cents per share. That is a 52% increase compared to the previous year. So that's it for Seplat. We also have here in Nigeria the Transcorp PLC for full year. At the end of it, we saw revenue went up to 544.14 billion. That's up 33.4% year on year, going from 407.92 to 544. That's what we have. Gross profit also went up by 40.32% for Transcorp. Went from 195.67 to 274.55. Operating profit also went up about 38% year on year, going from 139.69 to 192.88 billion. Profit after tax was also up. We see there, we have another slide. There you go. Profit after tax, which is a more important number you would look out for, went up 44.45%. So went all the way to 135.91 billion naira from 94.09 billion. Earnings per share, 844 kobo. That's a whole 481% compared to what you had the year before. Total assets went up now at the trillion naira. Total equity also went up, and dividend for the year was 2 naira for a share. That's for Transcorp, and that might be news to maybe a potential investor in Transcorp. But let's head into the market proper and see what the numbers look like intraday for Nigeria's market. We see a positive market there, building on the close from yesterday. The oil share is up 0.06% at intraday, 194,489.30. In Johannesburg, it's also positive, 127,019.60, and that's up 0.22%. But it's not the same story for Egypt. Egypt, we see, is in the negative as intraday, more than 0.5% down at 48,718.45, and for Nairobi, almost 1% in the positive is what it closed at yesterday. And then we move to the Middle East and see a very red market. For most of the major market, there Dubai is negative 0.63%, Abu Dhabi is also negative, Saudi Arabia more than 1% in the red, as well as Qatar almost 2% in the red. The Middle East market's not doing so well, more profit taking than cherry picking right there. Let's go to the United States now and see what the color is like. It's still red. For the stock features, it fell. Investors are digesting earnings. We saw Nvidia yesterday. We talked about it this morning. It was looking good, but it seems that hasn't moved investor sentiment a lot. So Dow Jones is red, S&P is red, Nasdaq is also red at this time. They were slightly higher. That's talking about Nvidia after the chip giant posted the fourth quarter earnings, but I guess all that has been taken away also through profit taking. Let's go to Asia now, where the market is closed. Another record high is what we saw for the Nikkei 225. 58,753.39 after it gained 0.29%. The Kospi is also positive, really positive there for the Kospi of South Korea. The Hang Seng is, however, on the red side at this time. And then when we look at other parts, especially India, we see that India is green, but not for Shanghai, just a little bit down for Shanghai. Let's also tell you that the Japanese government tapped the Ayano Sato University and as the central bank board members, both dovish in their policy stance, which aligns with the Prime Minister's approach right there in Japan. Let's move from Asia to Europe now and see what investors are doing in that market. And we have Lars joining us for that info. Hey Lars, good afternoon. What are investors doing in your market?
Yes, how you doing, Ini? Good to be with you again. We are in the green here with all the markets throughout Europe, but really only the CAC 40 in France is having, I would say, a relatively strong showing, up almost 1%. The other indices here, the FTSE in London, the IBEX in Spain, they're just barely in positive territory. The DAX actually mustering 0.5%, so that is not all too bad. We did see some strong quarterly numbers coming out of a few sectors, but they don't seem to inspire investors. Not really surprising, I would say geopolitics is much more important these days. We're having the German Chancellor still in China next week. He's going to see Trump in Washington. So everyone is kind of focused on what we might be hearing on the trade front. So far, not all too much. And that's likely why we're not seeing bigger moves in the markets for now.
Yeah, and it does seem like one of those moments that health and the economy meet. We hear the European Union is concerned about the impact of smoking on the economy.
Yes, indeed. And the European Commission is out with some concrete ideas on how to rein that in. And the German government is discussing those plans as well. Front and center are taxes. A simple idea: raise taxes to make smoking more expensive equals people will smoke less. Here are some numbers for you. In Germany, around 22% of the population are smokers. EU-wide, it's about the same picture. Now, their habit is certainly a bad one. Smoking costs 130,000 lives in Germany alone every year, most, of course, in form of lung cancer. The healthcare cost tied to treating smoking-related diseases is approximately 30 billion euros. Add to that the general economic damage of around 70 billion euros. That's for work hours lost, less productivity and such. Now, both Brussels and Berlin would like to raise the tobacco tax from 90 to 215 euros per 1,000 cigarettes. That would bring in around 7 billion euros per year. And that's money that could be spent, according to those plans, on lowering the value-added taxes currently paid for pharmaceuticals from 19 to then 7%. Such a move would bring, of course, tremendous savings to the health insurance agencies that are currently facing massive deficits.
Yeah, but I wonder what those who be paying that, the tobacco industry, I wonder what they are saying.
Yeah, sure. They are not happy about higher taxes. Now, one can, of course, debate whether we should be all too concerned about them. When your product is literally making people sick or even killing people, then maybe it's not a business worth protecting. But besides that, tobacco firms are arguing that higher taxes would also likely drive customers into a black market. Indeed, around every fifth cigarette currently smoked in Germany has apparently been bought either illegally or legally in a neighboring country, thus diminishing, of course, the actual tax income as well. Tobacco business insiders are also saying that even higher taxes would likely increase the share of illegal products in the country, and they point out that illegal dealers might also sell more product to younger smokers, those who cannot legally buy in stores anyway, and that higher taxes thus might have the opposite effect of what Brussels and Berlin are planning. Now, one should remember this is, of course, the industry speaking, and they're trying to protect their business. Lawmakers, for now, they're working on plans for higher taxes, whether the businesses like it or not.
Yeah, Lars, always a big headache trying to find a balance, in all of these economic issues. But thank you so much for bringing us up to date on that.
Thank you, Ini.
So let's see what's happening in crypto. We saw a recovery in the market, and that has been sustained from yesterday, talking about the price of Bitcoin and all of that. It's a green market as we speak, and hopefully to stay that way for some investors' sake. But some stories making the headlines: the International Finance Corporation, the private sector arm of World Bank, has announced $40 million equity investment in Zetric, and that's to advance digital public infrastructure services in Malaysia and across the ASEAN region. Also in the United Kingdom, the chair of the UK Parliament Joint Committee on National Security Strategy is asking the government to temporarily hold cryptocurrency donations to political parties. Politics and cryptocurrency, always very sensitive, always. In South Korea, they are forcing crypto influencers to reveal personal holdings. So you don't just come advertise for people to put their money. Are you also invested in that? That's what South Korea is doing. Those are the headlines from the crypto space, and that's it on Business Incorporated today. Thank you so much for being a part of it. Always fun to know business and protect our money. I'll do that again with you during the 10 p.m. news on Stock Market Reports. Bye-bye.